May we be upstanding for the national anthem.
And sing of Zambia, proud and free, land of wealth and joy in unity, victors in the struggle for the right. We won freedom's fight, oh, one, strong and free. Africa is our own motherland, fashioned with and blessed by those who blend. Let us, all our people, join as one, brothers under the sun. Oh, one, strong and free. One land and one nation is our cry. Dignity and peace in Zambia's sky, like a noble eagle in its flight. Zambia, praise to thee, oh, one, strong and free. Praise be to God, praise be, bless our great Zambia, Zambia, Zambia. Free men we stand under the flag of our land. Zambia, praise to thee, oh, one, strong and free.
We may remain standing for a prayer by Mrs. Nomsa Chinunda.
Shall we pray? Our gracious and loving Father, we give you thanks, Lord, for life. We thank you, Lord, even for the nation of Zambia. We thank you, mighty God, indeed, for your word says that you are the one who gives the ability to create wealth, even the wealth of nations, mighty God. King of glory, you also grant us wisdom, O Lord, to manage this wealth. This morning, mighty God, we pray, Heavenly Father, that, Lord, even the decisions that have been made regarding this nation, King of glory, and the management of the wealth, mighty God, may translate, O Lord, into the prosperity of this nation. King of glory, we pray, Lord, for transition of thought and clarity of speech as these decisions are communicated to us this morning. It's in Jesus' name that we pray with thanksgiving in our hearts. Amen.
Thank you very much, Nomsa. We may be seated. The governor, deputy governors, members of the Monetary Policy Committee, directors here present, members of the press, ladies and gentlemen, good morning. I welcome you to the fourth quarter media briefing, which is the last scheduled briefing on monetary policy for 2025. As you may already be aware, the Monetary Policy Committee was meeting from Monday to Tuesday yesterday, and this morning the governor will be announcing the decision of the committee. We are coming to you live on ZNBC TV2, Diamond TV, and the Bank of Zambia Facebook page. Very special gratitude to Prime TV for giving us a live feed as well. To our online audience, we acknowledge your presence. Thank you very much for joining us. Allow me to introduce to you the dignitaries in front. We have the governor, who is flanked by the two deputies, deputy governor in charge of operations on his right, and deputy governor in charge of administration, Mrs. Reka Chifue Muhango, on his left. Next to Mrs. Muhango, we have director in charge of research, Dr. Jonathan Chipili. On Dr. Chipimo's right, we have director in charge of financial stability, Mr. Goodson Kataya. My name is Besnat Mwanza, assistant director in charge of communications, and I will be your director of program this morning. Without further ado, I will at this point invite the governor to address the press. Governor.
Let me ride on the protocols that have already been established, but just to recognize my colleagues, the deputy governors, the members of the MPC, Monetary Policy Committee, ladies and gentlemen. Welcome to this fourth, the last in the series of meetings this year. As you heard, we have been meeting since Monday. Today, we share what this meeting was all about. First, we'll share the decision that the meeting made, then give you more insights on how inflation is faring, both in terms of the outturn and the outlook. Then we delve into the foreign exchange market. I think this is an important market which has had quite a significant bearing on what we are seeing on the inflation front. Relatedly, we'll share information on gross international reserves. This is a question people always ask, even if when we put it in, you still get a question, so we thought that we should be upfront with you. Then share information on the external sector by looking briefly at the current account, and then we look at how markets are faring in terms of credit developments in the domestic economy. Then we take a look at what economic activity has been and promises to be in the period ahead. Then I'll try to answer, but this will come after I draw the conclusion on the foreign direct investment and the remittance flows, because we have had some questions on this, so we thought that we could share some information on that. So this will come after I provide the conclusion. The Monetary Policy Committee at its meeting 10 to 11 decided to reduce the monetary policy rate by 25 basis points to 14.25%. The committee took into account that inflation has declined further in the third quarter, and the projections indicate a faster deceleration towards the lower bound of the 6 to 8% target band over the forecast horizon. The committee was also mindful that inflation still remains above the target band, and market expectations of inflation, although lower this time, remain elevated. So now let's see what exactly we are talking about, inflation decelerating. So what we observed is that the downward trajectory in inflation accelerated in the third quarter, with inflation declining to 12.3% in September from 14.1% in June. Go for more information here on table 1. This is the usual table that we share. It's divided in two parts, as you may recall. The first part, the upper part, is average, and the lower part, we are talking of the end period figures. So if you look at the upper part, overall inflation declined from 15.3% in the second quarter to 12.6% in the third quarter. Food inflation, which is a major component of this overall inflation, also declined from 17.7% to 14.9%. Equally, non-food inflation declined from 11.8% to 9.3%. These are average figures, but annual numbers. Then when we look at the end period numbers, the overall inflation also declined from 14.1% at the end of the second quarter, which was June, to 12.3% in September. And food inflation declined from 16.7% to 14.6%. Non-food got even into single digits from 10.3% to 9%. Now, in terms of the contributions to this inflation that we are reporting on, there are two aspects, as I indicated. You have the food side and the non-food. So the left panel on this slide is showing inflation, the contribution of food inflation. I think what you see here, which is what I'll come back to, is that there's a bit of stickiness. We had expected that the food inflation would fall down much faster, but that wasn't to be so. Now, one of the stick areas we note, as you see from the chart there, is the vegetables. That dark, you have blue, and in between there. It seems like our farming habits have changed, because usually during this period, people grow a lot of vegetables and the prices tend to drop, but this is not happening. And this is not just this particular quarter. We have seen that even last year, I think it was the same case. So I think we need to get down to growing more vegetables that can stabilize the price of food. Then on the right panel, we have the contribution of to non-food. There, I think one to stress is the transportation. If you look, the brown, the yellowish at the top, you see there, it was pronounced in the earlier quarters, but it was gradually coming down. If you see in the very last bar there, you see that yellow, is it orange? It's much smaller, which is what is contributing importantly to this decline that we have seen in non-food inflation. Let me go back to where I left. Now, if we go beyond the quarter, which is October, we see that inflation fell further down to 11.9%. So it's inching towards the target band, but still above the target band. Now, what were the key drivers? We cite a few here, mainly the continued appreciation of the kwacha against major currencies and the impact of the recent bumper maize harvest, which has contributed to the lower prices of maize grain and maize meal. So this is still going on. We're yet to see whether it has really played out altogether, but it's a matter we will share in the next meeting. In terms of outlook, we have observed that when we did the revisions to the forecast, that for the year as a whole, we see that inflation has actually gone up slightly to 13.8% from 13.3% when we did the projection in August. This, as I indicated earlier, was on account of slower than anticipated decline in food prices. I think I did share with you the charts there. Okay. Chart 3, it brings this out very clearly. But before I come to that, let me just go back to where I left so that I complete this and then show you in graphical terms. So what we observe further is that from the second half of 2026 to the end of the forecast horizon, which is up to the third quarter of 2027, inflation is forecast to decelerate faster than earlier projected in August. It is forecast to average 7.6% in 2026 compared to 7.7% we projected in August. In 2027, inflation is projected to move closer to the lower bound of the 6 to 8% target band, averaging 6.6% over the first 3 quarters of the year. That's the forecast horizon. We go up to the third quarter. So throughout that, inflation is coming down. The main factors are lagged effects of the appreciation of the kwacha against the US dollar, lower fuel prices, and downward adjustment in electricity tariffs to residential customers. The risks to the inflation outlook are still assessed to be supportive of lower inflation, and these include the favorable weather forecast for the current farming season. We hope that that continues to be the case. Improved external sector conditions reflected in higher copper export earnings and subdued crude oil prices, and the observed easing of geopolitical tensions. So graphically, this is what I was trying to say here. If you look on the chart on the left side of the panel, the red dotted line was our projection in August. The one which is now blue, the dotted line, is what our projection is showing in November 2025. What you see is that although at the beginning the forecast is a bit sluggish this time than was the case, but the last time we are seeing that inflation was coming down but still moving towards the top part of the target band. But this time around, as you see, it's moving towards the lower bound, which is the 6% of our target band. So the idea is to have inflation within that band. So in terms of figures, which I read out, they are contained in the small table on the right-hand side of the panel, where I said that if you look at the August of projection for 2025, we had projected that inflation would end at 13.3%, but this time, because of that sluggishness in the movement of prices for food, it is projected to be ending at 13.8%. For 2026, we had projected that it would be averaging 7.7%. We are now projecting that it will average 7.6%. And for the 3 quarters in 2027, previously we had projected that it would be 7.7%, but now we are showing a much lower figure of 6.6%. Moving on to the foreign exchange market, which, as you have noted, is one of the key drivers in the movement in the exchange rate. What we observe is that the exchange rate continued to appreciate in the third quarter of 2025, although at a reduced rate. So it's still appreciating, but it did so at a reduced rate. The kwacha gained by 3.1% against the US dollar, compared to 14.4% in the second quarter. This is the chart on the right-hand side here. You note that the solid line that measures the movement between the kwacha and the US dollar. Then the brown numbers, those are average. They are monthly percentage changes, which is the brown. As you see, there's a line there which shows that if you are above, that is depreciation. If you are below, it shows appreciation of the currency. What we observe too is that during this period, the elevated demand by the energy sector and the conversion of maturing government securities, including coupon payments by non-resident investors, accounted for the slowdown in the rate of appreciation. In other words, we are seeing that those investors who had invested in government securities, they were converting their coupon payments. These are the payments that are made every 6 months to those who hold government bonds. So when they do that, that means they cash in and get dollars for that to remit, and that's what contributes to that. Then we are saying that also the kwacha appreciated further by 3.9% in October. That's just in the month of October, mainly supported by increased supply of foreign exchange by the mining sector. Remember what I said earlier about that the contributors are the good copper prices and the production of copper. A weaker US dollar also contributed to the strengthening of the kwacha. So let me show you graphically what we are talking about here. If you look on the chart 5, which is on the left-hand side here, the brown line is showing the US dollar index. So we trace this as far back as December 2020. So you can see in that period it was rising when just after COVID, the dollar was strong, because if you recall that time we are talking of also the tightening of monetary conditions in the US. But since then, it reached a peak and it has been coming down to the current level where it is so low. Then the blue line is showing the one for emerging markets. This is a basket of emerging country currencies, where you can see that whereas their measurement is going up, whereas the dollar is going down, which means that these currencies were gaining against the US dollar. So we selected some to show that clearly. This is what is showing on chart 6 on the right-hand side. So you will see there that the kwacha is the 3.1% that I mentioned of appreciation. There are a number of others who were in that range: the Nigerian naira, the Brazilian real was also at 3.1%. Topping the list was the Tanzanian shilling. Then you see others. The easy way to look at this, there's a line there, zero line, vertical zero line. On the right, it means appreciation. On the left, it shows depreciation of the currencies mentioned there. Further, in the foreign exchange market, I did mention that the mining sector was the largest contributor to the foreign exchange supply during this period, and indeed, a net of $440.5 million was sold directly to the market. That means the mining sector was able to offload $440.5 million to the market directly. This is a much higher figure than was the case in the previous quarter, where they offloaded $418 million. So this is what is showing here on the right-hand side in the chart. But that was not all. They also remitted directly to the Bank of Zambia $196.3 million, although this was lower than what was remitted in the previous quarter. In the previous quarter, they remitted $262.1 million. So the supply to the market increased, but in terms of the tax payments reduced during this quarter. Further, in the foreign exchange market, that while supply of foreign exchange by the mining companies improved further, the significant drop in net inflows from non-resident investors led to a decline in overall supply. Here you see this chart on the right-hand side. If you look at the top part, look at the zero line there, you see there is deep green color there. If you look, that was 2023 Q2, that's when it was biggest. Since then, it disappears, it comes back. The last quarter, it was quite sizable, you see that. But come this previous quarter, we see that it was shrunk, which means that they were not significant players in the market by way of supply. Now, to moderate the volatility in the exchange rate and support importation of critical commodities, the bank provided market support of $120 million to the market. As a result, excess demand reduced substantially to $24 million from $156 million in the second quarter. So this is the foreign exchange story and what informs the movement in the exchange rate. Now, turning to gross international reserves, we show that the reserves rose to $5.2 billion at end September, which is equivalent to 5.2 months of import cover. These are imports which are prospective imports, that is looking ahead. This compares favorably to end June when reserves were at $4.7 billion, which represented 4.7 months of import cover. The build-up in reserves was mainly due to the disbursement of $191.1 million from the IMF under the ECF arrangement. This is following successful completion of the fifth review. There are also project receipts that the country receives from the World Bank, AFDB, and other cooperating partners. Then we do have banks also here hold foreign currency deposits where we do apply the statutory reserve ratio. So those also add to this figure of 5.2 billion that we're talking about. We also made some purchases, and the interest earnings on reserves combined give us that $5.2 billion that I referred to. During the third quarter, turning to gold now, we made a purchase of 186.62 kilograms of bullion, monetary gold, with a purchase value of US dollars 21.5 million. This brings the total holdings of gold to 3,051.3 kilograms. That means 3 tons of gold with market value of $396.3 million since we started this program in December 2020. The current price of gold, you can see, has gone up. It's 4,115.68. This is per gram. So that's why people are fighting to get into gold production. You can see that's what is driving that. So the chart is just putting these numbers in terms of the gross reserves, chart 9. The current account, the external account, we say preliminary data because this tends to change from quarter to quarter because that's when we do the survey. So what we see at the moment is that the current account recorded a surplus of $0.03 billion, or 0.4% of GDP, compared to a deficit of 0.5 billion, or 7.8% of GDP in the second quarter. So this is positive news in terms of the external sector. This, combined with the fact that you have reserve builders, is what also works as an attraction to those who want to invest in our economy. This was due to a stronger growth in exports than imports and reduction in reinvested earnings. Exports grew by 22.1% to 3.7 billion on account of higher copper export earnings and non-traditional exports, that is maize, barley, tobacco, electrical cables, cement, and lime, as well as gemstones. So all these are areas where there is scope to actually increase. We would be actually much better having this grow quite significantly as we raise copper earnings, because then that means we have a diversified base for export earnings. So on the right-hand side, we are showing you the same information, but in graphical terms. Further, on the current account, imports increased by 11.8% to $3.1 billion. This chart on the right shows this. I think what is important also here to point out is that if you look the gray shade on that represents intermediate goods. So yes, you have imports going up, but if they are of intermediate good nature, then it means that they are going into productive areas. So the consumption, which is the blue, the green there, is what we want to control. Because when you are consuming so much, this is why people say we are import dependent, but we want more of this to go into productive areas so that, one, we can cut down on imports. Two, we can generate, because when you export raw materials as we do, we are actually exporting jobs. Because those who produce the goods that we import, that means they employ more people. So that's the balance that we need to strike. So the demand, as I indicated, was sustained by these very variables I referred to on the right, in the right-hand chart. Now, again, looking at the current account deeper into detail, we tried to look at what is the situation in terms of imports of diesel, especially when you look at that from the time the open access was done. So you see there's a line there which is with an arrow. You can see that import of diesel has reduced since that open access has done. Now, here there are two things. It's not so much the volume, but the pricing of this is what is contributing to this. That's what we are looking at, because that's what the open access is supposed to deliver lower prices for the commodity. Turning to credit developments, we note that overall domestic credit growth rose to 17.4% year-on-year in September from 12.7% year-on-year in June. This is what is shown in the chart on the right-hand side. So the blue shading there, that represents private sector, which grew by 21.4% from 19.8%. This was largely on account of lending to electricity, transport, agriculture, and manufacturing sectors. Lending to government did also increase due to heighten demand for government securities. Here, you may recall, many of you may now perhaps be also participating in the auctions that go or purchase of government securities through the portal that the bank developed. So this is producing some of those results. So that in government borrowing increased through government securities. We see that outstanding government securities stood at $242 billion at end September. Out of this amount, non-resident investors were accounting for 61 billion kwacha, or 25.4%. So this is a segment we always keep an eye on. You remember earlier we thought that then the coupons are not converted, they do this. But at the same time, when they come to participate in this market, they bring along dollars, which augments our supply of foreign exchange. There are two things that happen when we experience that. One is that addition to the holdings of dollars, but also they contribute to the movement in the interest rate on government securities. So it moderates that because there's more demand, which means that the government then can get at a reduced cost to the treasury. Economic activity. Here we see that there were further improvements in the third quarter with favorable business conditions for the private sector as reflected in Stanbic Bank Zambia Purchasing Managers Index. This is the one we show on the right-hand side. You can see that when there's that line there, the 50 line, if it's below, it shows that there is activities constrained. But if it's above, it shows that it is quite positive. And the bigger that movement, the better. So what you see here is that there was a slight reduction, the last bar there, but it's still quite noticeably sizable. Then the other thing that we do is we do undertake a quarterly survey of business opinions and expectations, which also shows that there were improvements in economic activity. So the way to look at this is that you look at the color coding. The red is what was in the Q2, and then the greenish color there, that is the third quarter information. So you can see that the third quarter shading is enveloping the whole of second quarter. The red is entirely inside in all the variables that we are measuring. So that is indicating that the businesses are saying there is improved activity. So the average, when now we took them together, obviously, the average is affected by the extremes. So you see that it comes a nice figure, but really what is of significance here is that in the third quarter, economic activity was much, much better. Further, in terms of the growth prospects over the medium term, we show that these remain bright, and all these different ways of looking at growth, each one of these use different ways of estimating or projecting what growth. They all come out showing that growth is on the upward trajectory. And there has been quite heightened talk on this because it's extremely important. The government mantra is growth, more growth, and more growth. which means that we have to grow. Why do we have to do that? It's because even the debt restructuring that we have, the debt overhang, part of it, a large part of it, is because we have not been growing. So if the economy was growing, we would not face that constraint that we are facing. Also, with the more growth, we should be able to absorb some of the unemployed youth and the others in the market. So growth is very important, more so if that is in sectors such as agriculture, tourism, which require a lot of hands to do. Because mining, as you know, is much, much more capital intensive, so they don't employ as much. But the existence of the mining sector has got a lot of linkages to other sectors. You can very well imagine where they are doing their work. Those of you who have had the opportunity to go to the mining companies, you see a number of satellite activities in the vicinity. So we urge that this continues to be the case, but we are talking of inclusive and sustainable growth. Now, come to the conclusion. All this, what I was talking to, was to explain why we came to this decision. You can see that there are these positive developments going on. The economy is growing, inflation is coming down, the exchange rate has appreciated, but we are also mindful that although inflation is coming down, it is still outside the target band. We also see that the expectations of players out there, though they are coming down, they are still elevated. Geopolitical tensions are easing, but they haven't quite gone away. Therefore, as a committee, we felt that it was important to move cautiously, and hence our reducing the monetary policy rate by 25 basis points. This notwithstanding, okay, I have already mentioned that, so maybe I shouldn't say that again. So in short, we have reduced the policy rate because of those developments that I have referred to. So this would end the presentation in terms of explaining the decision of reducing the policy rate by 250 basis points, or 0.25 percentage points. Now let me move to something which has been making rounds in the media and the economy generally. I think the debate on FDI is quite rife, so we thought that it would be helpful during this presentation to also say something about how this is faring. So what you see on the right-hand side is FDI is growing. Now, it's only in 2022 where there was this dip, but otherwise we have had positive flows. Now, what sometimes gives rise to misreading of the information is that when people are investing here, it is recorded as a liability because it's accounted by those who invested in their home country. So when we invest outside, those are our assets outside. So sometimes it's possible that people misread this and they say, it's a minus. That means there are outflows to the FDI when you are saying that they are inflows. It works the other way around in recording. When someone invests here, it is a liability. It means it's like you depositing money in a bank. The bank is happy to receive those deposits, but at the same time, it recognizes that that's a liability because at some point they have to be paid back. So But when they have that money, obviously they have the opportunity to invest it. So similarly here, when someone brings in money, it's a liability to us because at some point they will want, and that's what happened in 2022, that there were net payments of dividends to the investments people had made earlier. So the idea is that when it comes, obviously it generates the employment that we are looking for, technology transfer, and all those other things. So this is what this is really showing here. So it's part of the presentation, so you will see the details later. The other thing that we thought we share information on was remittances. We do have positive remittances from the diaspora. So in terms, this works both ways. There are also people who are non-Zambians who are working here. They also remit to their respective countries. But on the balance of things, there are more inflows than there have been outflows. So here too, we give you more detailed information which you may find useful when you look at the presentation that we have today. So with that, thank you for your attention. God bless.
Thank you very much, Governor, for that presentation. So colleagues, there you have it. The monetary policy rate has been reduced by 25 basis points to 14.25. We are now going to have a question and answer session. If you do have a question, please walk down to the banner. As always, state the institution that you represent, give us your name, then you can proceed to ask your question. Who will be the first taker?
Good morning, Governor. Good morning, everyone. I'm Ketra Kalunga from Times of Zambia. So my question is just on the update on the odd currency. So I wanted to find out how much of the odd currency has been withdrawn from circulation.
Good morning, Governor. Good morning, team. My name is Munyumba Mutwale, Telegraph. My question is on credit, the rate of credit right now. We have seen, obviously, credit growth, and we have seen, especially in the recent auction, seen again a drop in yields on the bond market. But we're still yet to see a drop in average lending rates. According to the last fortnightly, we're still seeing lending rates on corporate level at around 23 to 24%, and at retail level around 28 to 29%, showing that the premium, the risk premium above bonds, is actually getting higher and higher. What's the explanation, I think, of the banks taking such a cautious approach to bringing the cost of credit down? Are they waiting for the central bank, or are they not taking the lead from the bond market itself? Thank you.
Good afternoon, Governor. Good afternoon, everyone. My name is Justin Perry from Zambian Business Times. So my first question basically is on, we've seen recent that the kwacha has gained and there's been sort of stability in the kwacha. So just want to get your comment from your side on what you are doing in order to ensure that there is a stability in the exchange rate. Then my second question is, some economists, some experts in the field seem to argue that your decision in the MPR seems to favor banks at the expense of businesses and consumers that are having to bear effects of high lending rates. So I just want to get your comment in regards to that. Thank you.
Governor, you may proceed to respond to those questions.
This question you are raising, Ketra, it's odd currency. Where is the Director Currency?
As at 31st of October, we had withdrawn 13.7 billion. We have 3.1 still in the market. And this represents 81% of what we had as at 31st March.
Now, the premium between, I think there are different factors which are at play. The government securities, what drives that is the government activities. When the government is looking for more money, that tends to push that. But now what you observe in recent past is that the government has been very prudent in terms of managing its fiscus. One of the things, when there is deficit, the deficit actually has been coming down, and they are now having a primary surplus, which means that the difference between borrowing, the revenue and expenditure, excluding interest rates, the revenue is higher. So that's why it's a surplus. Now, you recall that one of the reasons why the yields on government securities were so high is because we are running high deficits. There was desperation to get more money by the government, so they could get these even at any. So there's a time lag between this, between what happens there, because the banks tend to use that as a base for their lending. Now, on their part, the banks, they are very cautious when it comes to reducing interest rates. I think it's like what you see at the filling stations. At filling stations, when the price of fuel, ERB announces that the price of fuel is going up, instantaneously you see that that changes. But I'm sure you have observed that when it is the other way around, it takes a bit of time to adjust. Now, why is that for the banks in particular? Is that, remember the example I gave when talking about FDI, that when you have deposits, it means that these are liabilities which you have to honor at some time in the future. Then, but it's the same liabilities that the banks use to make loans. Now, if they have made a loan of, say, 3 years, and then you have this quick sudden change in the government paper, it means that if they have to reduce, they may have to recall those loans, which will create another problem to those who are owing the bank. So there are all these dynamics, but of course that's just one part of the story. The other part, I think it will be best answered by the banks themselves, because they are the ones who determine. Remember, they are also part of the private sector, and they are in there to make money. You see that when banks report is profitability, because if the banks are not making a profit, it means that they may not continue in business, which means it has implications on you, the clients of the banks. But one of the key determinants of that difference between that is these dynamics which are at play. The government securities the cost can reduce overnight. You know, it can even, today is Wednesday, say tomorrow when there's an auction, it can just come down like that because the people maybe are not coming to buy enough, or there are too many and they compete away that premium which is there. But the banks would have to take that into account in adjusting their books so that they don't get caught up. I don't know, maybe there's something I missed you can add, Tijo.
No, I think, Governor, the only thing I'd add is I think it's an important point. I think the issue of the premium, in other words, the wedge which has existed between the lending rate and deposit rates, has existed for a very long time. And I think this is something which we've mentioned to the banks. I think it has a lot to do with just profit making, quite frankly. But it also has a lot to do with, I think, competition and the fact that in the past the government was running a very, very high, as Governor has explained, But one of the conversations I think we've been having with them is that, as Governor has said, the government has been strengthening its fiscal position. And that reduction in yield rates means also there's going to have to be a reduction in what you earn from investing in government securities. So they need to start investing in people. They need to start investing in businesses, because otherwise, going forward, the way the government has worked, you won't be able to get the premiums of 35% you are getting. And you'll have to now start turning to businesses and understanding what their needs are and being able to lend to them. And those are the issues we've done. On our side, I think the only thing we could mention is that in the facilities we've tried to introduce to support the economy, this was the TMTRF or now the SRF. You see we lend at the policy rate to the banks, and in the SRF we even put a cap on what they could lend to the public. And we've seen much lower rates under that facility. I think the directors can mention, but there are some 17, some below that. So there at least we've seen in our facilities, we've tried to make sure that the banks can lend at a more reasonable rate and also over a longer period of time, because that facility like the SRF goes up to 7 years. So I think that's what we've tried to do on our part to nudge the system. Thank you.
Now, Justin, on your exchange rate stability, that's a very interesting question you are raising, because right now we have appreciation. Not long ago, you had a massive depreciation of the currency. The chorus was in the other way around to say that, no, this is hurting us. Now you get an appreciation, you get another chorus to say that this is hurting us. So really, yes, stability is the way which guides us in even our intervention volatility. But remember too that this is not an exact science. You know, this is determined by the behavior of you, me, the business community themselves, how they relate to this matter. You know, so everybody has a different view on what they want and how they want to get that. So that plays out in the foreign exchange market. So what we have seen is that when the exchange rate changes direction, especially appreciation, it tends to overshoot more. Why? Because you see, if you take a bank, it is holding certain quantum of dollars or foreign exchange, which it bought at a certain price, right? Now, if the exchange rate is appreciating, it means that if they were to offload those dollars to the market, they will have to sell at a loss. I don't know if you are following what I'm saying. So that's why this tends to be much, much swifter when you have the exchange rate appreciating, because everybody said, I don't want to be caught with the very expensive dollars. I have to get rid of it. So that then tends to push the exchange rate to overshoot. Equally, when it is depreciating, you are also now, who wants to buy something, you are watching that very carefully. You say, no, maybe I should buy now before it depreciates further. So all these are decisions which are made by individuals depending on what they are doing. So remember, these are all doing these things independent of each other. So us here, we are obviously looking at this and how do we balance it out. So this is why we expect that there should be a certain band within which this can move, which can give you comfort that it doesn't overshoot too much. So, but it's not a science, like I said. It's so sometimes you can get it right, other times you may not get. So information flow is extremely important, especially for those who have bulk amounts. If we have that information ahead of them acting out, then we can kind of persuade them that maybe to moderate the way they do that. But sometimes this just happen overnight. You know, someone just says, oh, this is what is happening. then I must go and do this. And that exaggerates the movement in the exchange rate. But where we are now, there has been strengthening of the exchange rate as we have shown, but the swings are much more reduced than what they were at the beginning. So it's a continuous process. I don't know if I have answered your question. Then on the other thing, that this monetary policy rate favors banks than the ordinary people. I don't know how you look at this, why they look at this. Because, you see, why are we dealing with the policy rate? The common enemy is inflation. That's what we want to address, to bring it to that target band. Now, when we raise the policy rate, that's what we are trying to hit. So, now, when you say it favors banks, I think it goes to the question that your neighbor there raised, of saying, why are the lending rates higher than that? I think that's what you are saying, that because the policy rate is higher, that means the bank's lending rates also will be higher. But remember, we are not driven necessarily by that. We are driven by the fact that inflation is rising, or inflation is higher than the target that we have. That's what we want to address. So in doing that, there will be these effects which are not the same for each of the players. As a central bank, we have only 2 offices, the whole country, right? Here, head office and regional office. So how do we operate? We operate by influencing other players. Who are they? The banks. Why the banks? Because the banks are linked to the UO and everybody. So they are the intermediary through which this message is sent. So now, I don't know who people expect us to use in that. If you ask those economists who are telling you that, what other route do you want to use? You know? Because even when we are using open market operations, which is there, it's banks again which we use. You know? So it goes to what the DGO was saying, that it's the behavior of the banks also has to be aligned. But it's our decision is not dependent on favoring who, but it's guided by our desire to bring inflation down. But obviously, that will have differential effect on different people. So I hope you can bring those guys, we have a chat and understand what transmission mechanism they see this plays out. I hope that helps.
Thank you, Governor, for those responses. We can take a few from the online audience, since I note that we don't have here. On the question of the appreciation, Governor, there is Nela Kopakopa, who is also saying, what can we attribute the recent appreciation of the kwacha to? Is there something that we have done? Can't we continue doing it? As we all want a valuable kwacha. The same Nela is saying, how has the export tracking framework helped in improving the value of the kwacha? To what extent has it done so, if at all it has? Then we have Longo Simumba, who is saying, given that the current global tightening cycle may be peaking, what is the bank's modeled exit strategy for when it intends to ease policy? Will it be proactive or reactive? How will you communicate this to avoid destabilizing a flood of capital out of government securities? There's also Twambo Hamusute asking, do you think the high statutory reserve ratio is contributing to the hold-up of interest rates despite the reduction in yield rates. I think this is similar to what Mutwale had asked. Governor, maybe you can pick those.
I'll ask for help. I don't know. I thought we have explained what are the drivers of the appreciation in the exchange rate. For sure, if we continue having more exports, that will continue to have a positive influence on the exchange rate. So even also these other reform measures that we have been undertaking do play a part in bringing about the different changes that we are seeing. So it's a combination of factors which has been happening, which is now giving you these results. Some of the things that we take, the actions we take, they have a longer gestation period. They don't just happen now. It's like you going to school. You know, you plow through up to grade 12. You still haven't realized your benefits until you graduate from college. But when you look back, you may think I was wasting time doing this, but in fact not. So this is the same how policies, some policies are immediate in result, others take time to show up. That's why reform is not that easy to undertake, because sometimes when you are doing it, people think you are hurting them, and why should they go through that pain? But if you sustained that, you one day come to know. That's why reformers are patient. They will tell, no, wait. I think this is akin to farmers. I would cite that, because farmers, they know the weather pattern, that if this season you don't do well because of the way the rain pattern has happened, you are patient to wait the next season, because you know that this happens at a particular time. So we are doing what we are doing to also reduce this volatility that is there. But the idea is not to drive that the exchange rate must be strengthened, because it is a balance that has to be struck. You see, you are happy that it has appreciated. I can assure you the exporter is hating. Who is the one we are encouraging export more? It's a bit like what we had in agriculture, where you want cheaper maize, but at the expense of the farmer who is producing. So this balance has to be struck that both win. So this is the thing, that if it is overdone, it also has negative impact. So a very good point is to have the stability. I think it was one of the first questions which was asked. But I'll ask my colleagues to weigh in on the EPTF, and if there's any additional insights can be shared on this appreciation of the currency.
Thank you, Governor. I think on the appreciation, you've covered the issues. I think probably the important point which is not seen is the last one you made, that there are many reforms which have been done, even at a more technical level for us, in terms of changing the way in which the interbank foreign exchange market works. There was a lot of work which our colleagues are doing there in terms of making it more efficient and more having a bit more competition there. So I think, Governor, you've covered that. I think on the export tracking, it's important to probably first of all state that the main reason why we wanted to introduce it is that we had existed for a very long time in a space where we didn't know what happened with the resources which are generated by this country and by businesses. And this meant that when we do our balance of payments, our accounts with the rest of the world, put simply, it was very difficult for us to really make sense of them. And so one of the things which it was meant to do was to give us this information. And so apart from just collecting information from the banks as people transact with the rest of the world, we then added this idea that when people export, those funds which they export must first come back to Zambia, and then they can be used in whatever manner the owners of those funds want to do. So this has given us a lot of information. We have therefore, first of all, been able to improve our balance of payment statistics significantly, especially around the financial flows, which were always very difficult for us to get. But we have also seen, and the second point is that that process of the export is not yet complete, because we also have to introduce the same system in terms of services, because now it just covers goods. And the last point, which is going to complete it, is to introduce the part on imports, so that we can really track everything which happens in the economy. And so when those things are done, I think we'll have a very complete view of what is happening, and we'll be able to triangulate in terms of the information we have. The services should be launched, I think we had committed the end of this year, and the import side next year. In terms of the export tracking itself, one of the things we've seen is that there's been an improvement in the funds which have been flowing back to Zambia from last year. We launched it in January last year, if you know. I think last year up to this point we had seen something like 7.6 billion in terms of receipts. And then this up to now, Q3, we've done about 8.3. So we are seeing more flows. It may partly explain why we've seen some increase in the foreign exchange deposits in the banking system. Partly that's something around 4.5 billion now. And obviously, hopefully, that's something which will help liquidity in the market if the commercial banks are able to intermediate that. So I think that's what we can say, but there's no, if you're looking for the direct link between the export tracking and an exchange rate appreciation, you have to think about it that it's a system we are putting in place, and as that system develops, it should give us a much better environment within which to operate. Thank you.
Thank you very much. Jonathan, weigh in on the other question on the responses to global situations.
Thank you, Governor. In terms of the global tightening, indeed, this has probably come to an end, and you'll see this in our full report when it's published later in the month. The Fed probably has been the last to complete the cycle. They cut the federal funds rate. So effectively, what we see impacting us is the fact that we begin to see, for instance, in the Eurobond spread between the what you typically get in the US and what you get, people would get if invested in our Eurobonds, reducing. So what that means is that the risk premium people place on our assets is reducing. But more intuitively, you would see that because interest rates are now beginning to favor emerging economies, and this speaks to the chart that the governor showed about the trends in currencies for emerging economies. You see that because of that, the dollar has weakened and continues to be so. You see the opposite happening to currencies in emerging economies. That is also helping the Kwacha to benefit, besides the improved flow of foreign exchange from the mining sector. So all these things will get incorporated in our models, and you'll see that what we begin to see as performance of the currencies broadly will reflect in that, and that tends to feed into our projections for inflation, as we've seen in our current update. Thank you, Governor.
Thank you very much. On the Twambo's question that I think is saying in statutory reserve ratios must also be contributing to high interest rates. We can't deny that, but then you have also to understand the issue why we have had this raised. At the time, the Kwacha was depreciating very massively, and there was a lot of excess liquidity, and like all the time when we make these adjustments, we have a proviso or a statement to say that when the conditions warrant, we'll review that. So we haven't forgotten that. We will do that revision. But you also recall that at some point we did an operation where we did issue or where we admitted certain the government securities as part of the asset class for statutory reserve holdings. What did that do? What that did is that the banks that participated in that operation, the component that they invested in government paper, it means that it is remunerated. So that must be also netted out in terms of determining the effective rate of statutory reserve for those institutions. So I can also argue that maybe that is not fully reflected. You must also understand that, yes, we do keep these statutory reserve ratios at the bank for various reasons. It can be prudential, and sometimes also it acts for the foreign exchange market management. But don't forget that the banks also have access to this money in an intraday basis, which means that they can borrow it, play with it. But most importantly is that we have seen some of these excess reserves staying in the current account even long after they became available. What does that mean? It means that the banks are not in a hurry to withdraw those to do that. So yes, you might say just from the look of it that you have a high statutory reserve that is affecting them. But what about those that are in excess of that? Why should they be staying longer on the current account balance? So these are some of the dynamics, I think, which perhaps from outside you may not be aware of. But there are these dynamics which are going on there. People are even talking about, if you look at the times when we have had the strong challenges with, or serious challenges in the foreign exchange. So they look at the foreign currency deposits, say, but what is happening? Why are these things? If you look at that and decompose them, you may find that actually a good chunk of it could be actually excess reserves that are being kept, but they are not being lent out. So it is, yes, easy to point out to 26% as the cause of the rise in the, but there are dynamics which must also be taken into account. So it's not as straightforward as it appears. And this is a policy tool we use in certain situations, because when we use the policy rate, we are looking more for long-term aggregate demand issues. But when we use the statutory reserve ratio, we are looking at the liquidity conditions, the concerns that we want to address in quick order. So rest assured, we are looking at this, and when time is ripe, we'll revise them downwards, and then we'll see if that will translate into lower interest rates.
Thank you, Governor. We can come back to the room. If there are any questions, please walk down to the banner.
Good morning, everyone, and good morning, Governor. My question, Governor, is on the new banknotes. There are actually concerns coming from the visionary impaired community. They are alleging that the banknotes, the braille is actually fading from the banknotes. So I want to find out if the bank is aware of that, and if there's any measure that will be taken. And then the second one is actually asking if there are any concerns that have actually arisen from the phasing of checks from the bank, if there are any concerns that have come forth. Thank you.
Did you say your name and where you are coming from?
Oh, sorry. My name is Tetiwe Mwemba from Live Radio.
Thank you, Tetiwe. Munyumba, you are coming back.
Yes. I was obeying the rules about asking one question at a time. All right, good morning again, Governor. It's Munyumba Mutwale again from The Telegraph. So one of the things, Governor, you've mentioned before, that if we want to improve our exchange rate, or at least have it more stable, we actually have to do more activity, less of the trying to configure it from the policy side, and actually have more export and less import. So one of the bigger things that has happened recently has been the commissioning of the fertilizer plant. So I wanted to find out from the bank's perspective, since fertilizer is one of our biggest imports in the country, what is the projected impact we have now of either being fertilizer sufficient, and judging by the next investment that's going to be done, fertilizer surplus and exporting? What will that have on our FX rate? Will it stabilize? Will it strengthen? What are your projected outlooks on that?
Good afternoon, Governor. My name is Taindel from Zambian Business Times, a newspaper. You've reported 21.5 million United States dollars in terms of gold purchase. I wanted to find out, when you compare this to the previous quarters, of course, they've been averaging around 8 million United States dollars. I wanted to find out, what are you attributing this increase to? And also, have you commenced the gold purchase from Akasenseri gold mine? The other question, I think, is around the tax remittance. Of course, from the mining sector, of course, we've seen a reduction. What are you attributing this to? Thank you.
Governor, good afternoon, good morning. Thank you so much. Prudence from Diamond TV. I don't know if I will summarize my question, and someone will be on my neck if I don't ask. A few months ago, Governor, there was a complaint on one of the social media platforms from a colleague who was trying to pay for her school exams. She was studying at an institution. So when she went on a booth to withdraw money, she discovered that for that network, there was nothing to withdraw. So she decided to send the money to another number so that she withdraws. Unfortunately, the money was deducted, but it was never credited. And when she called the network providers, they told her to wait for, 42 hours, then 72 hours, then it went to days. And she was nearly missing an exam. In fury, she came to social media to express her anger. And I sent her the mail for Bank of Zambia to complain. And just on that particular day, the issue was resolved. Governor, the issue of mobile money providers and the aspect of challenges with resources, more especially if there is a deduction, but that money has not been received. Why have we seen less intervention from the bank? And if any, if someone holds on to my money for some days, which I didn't give them, they're supposed to pay me back with interest. Why aren't providers paying back people money with interest after holding it for a long time? The other question is on Ponzi schemes. Governor, you regulate as a bank money transaction. We have a situation where there's money flooding to, I don't know if it's an account or something. At what point does the bank detect or come in to see where this money is coming from? Because usually for Ponzi schemes, it's only when it blows off that we see statements from the bank. So at what point do you come in to ensure that you see what kind of business is being involved in this account, which is receiving huge sums of money? Thank you.
Thank you. Are there any more? Maybe we can take all the questions that are here so that when Governor responds, then we can close the session. Do we have anyone else? We'll check on the online platform to see if there's any, but from the auditorium, do we have anyone? None. Governor, I see no further questions from the audience here. You may respond.
Thank you. Thank you very much for those questions. Titiwe, first, I think just a clarification. They don't have Braille. They have raised features because Braille is much more complicated. And we tried with the current printers. No one, I think, does that at the moment. Because I think once you start introducing Braille, it also weakens the strength of the note. So the fading, we understand that, but what we are trying to urge, because what we have already observed is that some of the people, they are not surrendering the worn out notes to the security. So we are urging those who have notes which are already showing stress to exchange them so that you get newer notes which reduce that problem. We went a step further, if you recall, for this new series of notes. Previously, the notes were of the same size, but responding to that, apart from enhancing the tactile features where you feel on the notes, we made the notes to be of different size. The biggest being the 500 kwacha note. The rest are reducing in size until you get to the 10 kwacha note. So this is all aimed at assisting our brothers and sisters who are visually impaired. It's not foolproof. We understand it's not foolproof. But these are the mechanisms we're trying. So first, try as much as possible to have clean notes in circulation so that those features don't fade too much that they cannot be felt at all. Two is the size of the notes that we have introduced, which are of different size. So, and also education on all of us, especially you colleagues from the media, to help us in disseminating this information on the clean notes. I think that's what we can say. I don't know if there's anything else from, I don't think they have additional points to say. So we appreciate when you see that or hear, approach us. Then we can try to intervene by asking those who are in contact to make available cleaner notes. Yes.
No, Governor, maybe I can just mention, I think we've just had a team who were out on sensitization for the second round of currency. I think that matter was brought to their attention, and I think they did engage some of the groups, and indeed, as Governor was saying, on some cases it was very worn out, notes which should basically come back here for destruction. But I think we continue to engage with the market in explaining what is happening, so we have been engaging.
In terms of phasing of checks, I don't think we are aware of any problems. It has gone smoothly because it was a disappearing instrument anyway. So we just escorted it, so so then yes, Munyumbu, the fertilizer production and the other manufacture. This is what precisely we need. Remember when I said, see, in a conventional theory which was there before, we say that is why Bretton Woods would recommend depreciation of the currency when you have balance of payments problems, was really for two reasons. One is that let the exchange rate be part of the adjustment mechanism, which is happening for those of us who have flexible exchange rate. But when it came to depreciation per se, where the countries were forced to depreciate, not coming out of market interaction, was the expectation that when you depreciate, then you make it costly, right? So there will be expenditure reduction, because when you look at the thing, it is expensive. You think twice. Do I really want to do that? We still do it when we see that the exchange rate has gone. That's when we move in, because we know that there is an exchange of money there. There is kwacha and the foreign currency. So that's why we tighten this to make the kwacha scarce. But there's the other part, which is expenditure switching, that once you have seen that this is too expensive, then you start looking for alternatives. This is the import substitution argument to a large extent. Now, in the current setting, yes, we spend a lot of money importing fertilizer. So clearly, if it is someone who is producing that locally, it means that that money which was being spent outside can no longer be spent. So this is a process. Part of the changes that we are seeing arise from the fact that some of the manufacturers who used to import these finished products, or not manufacturers, but the consumers who used to import these products, can now find them locally. So indeed, this is a positive, but we cannot at this stage attribute the movement in the exchange to any single kind of such activity. But over time, we anticipate that this will come in very effectively. More so also that they are exporting on the other side. In fact, when they are into this space, they invested too in power generation, which is an additional benefit that is coming out of there, because they can sell part of the electricity that they don't use. So we encourage more of such operations. This is why the issue of value addition is so important for a country, because you can reduce your dependence. This is why for us as an institution, we are not comfortable when we hear people say that we are import-dependent country. Should we continue to be? No. Yes, you can import, but to really be solely dependent on that, then you are at the mercy of those who supply those things that you need so much. So we will definitely see some positive impact in due course, and especially as more come on this. But you will hear some others who now complain, because now the government also have to look at how do they protect those industries from imports of those commodities. Because, and I think it has happened already in some places where there is local availability, the duty on imported items is higher. So you make your choice. You are not stopped, but you make your choice if you want to pay a higher price, especially if you can get this same commodity, which is of equal quality, then you can do that. Okay, I think that's it. Then Tambel, gold purchase. You see, the gold we purchased, I think recently we were in Kansanshi. Some of you followed that visit, where we went actually to resign the agreement with the Kansanshi mine in terms of what they are supplying. They are our major supplier right now. Now, the way they extract gold is a byproduct of the production of copper. So it's not a gold mining company per se, but in the process of producing copper, gold also is found. So they have set up a refinery, and they showed us that two places now. There is the Ord, which is where traditionally we have been getting that gold, but with the expansion, they have also put up another plant, but I don't think that has yet kicked in. So the amount that can be sold is dependent on how much they are able to realize from that. But remember too that we are buying this gold using kwacha, because if we use foreign currency, then we are just a substitution, you see, which means we are lowering our other holding of foreign exchange. Like we have informed you here, we have 5.2 billion. That means we would have tried to reduce that to increase our gold holdings. So on the net basis, we may not be making that progress. So we insisted and they agreed that we pay in kwacha, because the kwacha, we have a lot of it. That also explains to the extent, to some extent, why the inflows in foreign currency for taxes comes about. Because if they don't need more kwacha, that means they have no motivation to sell the gold at the time. This is also linked to the VAT refunds. Okay? If at the time we want to buy gold, there is a huge payout by way of VAT refund, obviously they won't have need for more kwacha. And we have seen this happen sometimes. And sometimes someone would want even to come and say, no, can we now buy foreign exchange from them? He says, no, we would rather you stay out because you are a supplier. So now if you change from being a supplier, a major supplier, you become a consumer, then we have a serious problem. So they have to manage those things. So these are the dynamics which underlie these things. So you get more VAT refunds, more kwacha available, you don't need to sell your gold to get kwacha that you use for your other operations. So these are the dynamics which are there that would explain the reduction in the taxes that were paid in foreign currency. Then I think Prudence, that's, is there another question you asked? Sincere. I don't know, I mean, you as a journalist, I think you are following things. Sincere is not yet fully up. So we have said it before, maybe it's worth repeating that the gold that we buy is monetary gold. That means it must be processed to the highest standard. So, because if we start getting raw gold, we don't have enough space here to keep it. If we get, because we would have to find money to also to go and have it refined, which costs. And you know, gold is a currency, because everybody wants it. It is a universal currency. So security needs would be beefed up, which may outweigh the whole benefit you are getting. So what we have said is that, no, we will buy gold which is refined to the highest standard. And so far, Kansaseri hasn't come back in that mode that they can be selling gold. There are also efforts to establish a gold refinery so that all those who are mining gold can sell and be processed locally, and then we'll be able to buy. That's how it goes. Okay. Then the Prudence, yeah. These are the difficult times when we have as regulators too. Because you see, there are scams which happen even in this mobile money, which we have seen. So the players sometimes are overcautious, in terms of, I refund you, when in fact maybe it wasn't an error, it was something else. So that's why sometimes they give that time to really assess what has happened. But obviously it shouldn't be too excessive to the point that somebody gets in that situation. But it's a judgment call. It's a very, very, very difficult to give. Sometimes it's glitches within the system, because there is a scam, if I may share here. that where it can be inside a scam where from your end you think the transaction has failed, but from the other end someone has facilitated. We have seen that banks get hit that way. You know, there's a window which opens, and then it comes. You wanted to pay it, then you go with your money, so can you transfer? Then the window closes. You say, sorry, it didn't work out. But it didn't work out to you. The other side, someone has already facilitated something. Money is drawn. So you find the bank is losing money, but on the other side, there is no complainant to say that I lost the money. So there are a number of these scams. So what we are urging really is close working together in terms of information. And lately also there have been issues of network glitches. You are in the process of sending money, you find that the network drops. So what happens? You have a problem because that transaction is not completed, but somehow the system on your side it's working. So it's a very complicated thing, but we hear, so when they come up to complain, I think we follow up to see to it that people are compensated in a good time. This is why in other settings people use more of credit cards rather than these instant payments. That's the downside of instant payment, because even us, we face it. You go, you book a hotel room, then you said, no, I want to pay with another card rather than this. It takes weeks to get your money back, you know. So it's a process that we have to work through. I don't know, my colleagues, if they have additional points they can make on that one.
I think, Governor, just that, I mean, firstly, the first part is really consumer education. Huh? And I think that we have our colleagues in financial conduct supervision who have been doing quite a lot of work on both the consumer side to go out and educate the public, but also with the financial institutions themselves. I think we've had some forum this year where we were trying to educate ourselves on the need to make sure that we can serve the consumer to the best way we can. But the second point is really that when we say some of these scams, I think we talk about Ponzi. There are many of these people who are operating outside of the law. And so one of the things which are doing, just this session of Parliament, we've been updating the National Payment System Act. One of the things that does do is strengthen or provide for us strengthening the governance arrangements in these mobile money institutions and all payment system providers, and also strengthen consumer protection, including our ability to sanction. So a lot of these, for example, money lenders who are operating under the Money Lenders Act, once we deal with the Payment System Act, which is going to be revised, we're also revising the Banking and Financial Systems Act. Those will now formally come under us, and therefore we'll be able to deal with them more effectively. I think that's what I could add.
Yeah, on the Ponzi schemes, at what point do you come? You understand, you appreciate that these are clandestine schemes, you know, and they are done by people who are not regulated. So indeed, when the going is good, nobody talks, you know. We have had these situations actually when you hear and you want to intervene, the people you are trying to protect, they are the ones who attack you. You know, this is why, you know, we are making money. What do you want? You see, your interests are very high. These are very good, very friendly. Until they get beaten, that's when they come. No, but what you are saying. So really, it's very complicated, you know, because you don't know what is that. As we are sitting here, I can assure you there are people who are doing this. So it only comes out when they get cheated. That's when they will. But why didn't you say about this thing that was going on? He says, well, I thought it was safe. Believe you me, even us who are in the financial sector and the regulators, we have family members who are swindled. They don't want to come to us and tell them, can you say, President, you stop me? You know, but we are trying to protect you, not just to stop you. So it's very complicated because the people who perpetrate this are not average people. They are people with the high IQs and they know marketing. And you see, they win your trust. That's what happens. Whenever you get this, trust is betrayed. Because you see, they will tell you, people you respect who are members. That's how it starts. They start with the people who you can relate to, that no, yeah, if this one is. We have seen even law enforcement officers being part of the who are scammed. Says, but you are supposed to report. So it's very complicated because it's personal. You know, if I have no money and someone is promising to give me money, it's very enticing. And this is why even gambling is very, very much prominent at people who have low income, because you think that I win, but actually you lose. The house always wins. That's how the system is set up. So really, it's education and the people talking about. I'm sure in those groups, if you are seen to be one who is going to be sniffing and talking, they will avoid you. You know? They say, no, don't tell her. Because if you tell her, she's going to report. These things we have seen and they happen on an ongoing. So there is no set time. We move in when we have the information. If that information is not availed to us, we are in the dark just like anybody else, you know. But vigilance on the part of the members of the public is extremely important, so that they can see and report that, no, there is something funny going on here. Because even crime or other types of crime is community that can prevent that. These police officers, they are not enough to be able to see and hear everything that goes on in our homes, in our shops, wherever we drink from and all that, you know. So it's community awareness, and that these schemes are not the right thing for you. You appear you are winning, but the end result is disastrous. Because when you get confident that now I'll win, you put even more, you know, and that's when they disappear, you know. It's very, very complicated. So really, we don't have prior knowledge. If we did, we would prevent them. But the only way we can prevent them is education, so that people are aware. So we'll publish all the names of the registered institutions so that you can check, is this one registered or not registered. But sometimes also they fake this information. You see, you may find that they will put Bank of Zambia picture nearby. It's not part of it. So when you are seeing it, says, Bank of Zambia is registered. No, ask questions. That's where consumer education comes in. Ask questions, are you really registered or not? But they can also scam you and say, yes, we are registered, with the fake documents, which we only learn much later on, by which time people are hurt. So we don't cherish that people should be hurt. But we need each other here to be able to put them out of business, because they are stealing from people. There is no such thing as quick money. You are here, you are working for your money. But someone will come and say, no, forget about your journalism there. You can make quick money here. Be careful. You know. I think that was the last scheme.
Yes, it was, Governor. Thank you. We've been given 3-4 minutes more. So just one last one from the online audience, a quick one. From Fred Mumba. He's saying, why is it that financial service providers don't reduce the loan deductions when the MPR is reduced, but are quick to increase either our loan tenure or our monthly deduction when you increase it. How can the central bank help us?
Yes, indeed. I think your question is timely because we have reduced the policy rate, so that should result into this. I think it's a process which we have also implored banks to do, but sometimes, you see, the deductions, you may have agreed on a fixed quantum that should be deducted. So if they have to keep that, it may just change the time period over which you do that. We see this more often when it is the time when the policy is raised, because then they will have two ways of saying that, okay, do you want this, the quantum that you want to pay change, or do we extend the period over which you pay so that you maintain the same amount that you pay? Now, when it is reduction, this is in reverse order, a decision that has to be made. Would you be changing the time period? If it's significant, then that means you pay your obligations earlier than you had planned if you continue paying at the same rate. But if there is a discussion of maybe we adjust, then it will be different. But maybe Linus can explain better this.
Thank you, Governor, and good afternoon, everyone. Beyond what the Governor has indicated, we have engagements with the FSPs. We expect to see a similar advert in the papers following this reduction, where they give an option to the borrower whether what will be adjusted will be the tenure or a reduction in what you were servicing. So the way they announce when there's an increase in the MPR, it should be the same way they should announce when there's a reduction. So we will still follow up with them if we don't see any such adverts. But what we expect is with technology nowadays, there's probably bulk messaging that goes out to their individual customers in addition to the print media. I submit, Chair.
Sorry, Governor.
Yeah, I just want to wish everybody a happy and Merry Christmas, because this is the last time we are meeting this year. So whatever you can do, please do it safely so that we all cross over to the next year. So until we meet next year, all the very best. God bless.
Very much, Governor, for that message. We have come to the end of the briefing. Special gratitude to the production team, Fortress Media, ZNBC, Prime TV, Diamond TV for the smooth broadcast. To everyone who has joined us this morning, we say thank you very much. Until we meet next time, God bless you.